The government is in a hurry and there's no stopping the reform agenda. UPA 2, which earned itself a reputation of being in state of paralysis, today cleared more than a dozen pending reforms, all in one stroke. The government approves 49% FDI in insurance from 26% earlier, also clears the 49% FDI in pension funds. But these bills will need parliamentary approval before they come into force. The cabinet clears the company's bill and makes it mandatory for the corporates to set aside 2% of their profits for corporate social responsibility. Markets gain for the fourth day in a row as the Nifty tests 5,800 for the first time in 18 months. The Sensex closes the day above 19,000 on hopes of further reforms. Realty, banking and power stocks are the best performers. The government looks to attract more foreign capital into the fund-starved infrastructure sector. ET now learns the Finance Ministry may raise the external commercial borrowing limit by as much as $7 billion and could grant infra status to some more sectors to help them retire their expensive rupee loans. The stalemate between Kingfisher Airlines management and employees continues. Sources tell ET now the lockout is likely to be lifted only within the next 4 to 5 days. US markets advanced in spite of a batch of tepid economic reports. European markets have a lackluster day as the European Central Bank leaves key rates unchanged. Economic issues took the forefront in the first presidential debate between US President Barack Obama and challenger Mitt Romney. The stylish Republican candidate puts Obama on the map. In an exclusive chat with our network, Gujarat Chief Minister Narendra Modi says he's confident of a comfortable win in the State Assembly polls, sticks to his 1,880 crore charge against Congress President Sonia Gandhi. And in World T20, Sri Lanka sets a modest target of 140 for Pakistan. But it could be anybody's game as the visitors are off to a very average start. Good evening. It's a power-packed Top 10 at 10 and I'm Nisha Poddar. First up, the government is in a hurry and there's no stopping the reform overdrive. UPA 2, which earned itself a reputation of being in a state of paralysis, today cleared more than a dozen pending reforms, all in one stroke. The big-ticket one is the move to increase the FDI cap in insurance and pension funds. The cabinet has passed the company's bill, gave more powers to Competition Commission, autonomy to commodities regulator, all done, but will have to pass the test of the parliament. And as the finance minister urges all parties to help in the smooth passage of the bills, BJP is already up in arms.
Standing committee has recommended these bills, of course, with certain recommendations to amend. We have accepted the bulk of the recommendations. Therefore, I am optimistic that we will be able to win the support of all sections of the House, especially the principal opposition party.
I hope that the corporate sector will read this message, that the government knows what needs to be done, it's working on doing it. Government has now done its bit. It will go back to Parliament. We can't prejudge what will happen there.
ये सरकार जो है वो इंटरनेशनल रेटिंग एजेंसीज के रेटिंग के आधार पर देश की गरीबी की रेटिंग और देश के महंगाई की रेटिंग तय कर रही है और अभी इसने एफडीआई रिटेल में एफडीआई और थोक में समस्याएं खड़ी कर दी देश के सामने अब जो है वो और भी निर्णय करने जा रहे हैं.
So will politics and economics go hand in hand? Here are some of the experts with their views.
Very important reform measures, but I agree with you, they won't accelerate the GDP in the short term. They are long-term measures, medium to long-term measures, but they're certainly not symbolic. I think it's very important for India to reform. I don't know why political parties don't want to open up the Indian economy.
I'm not very confident that they're going to be legislatively cleared, and even if they are legislatively cleared, that's not going to happen in a hurry. What it does signify, of course, is the government is somewhat serious about pushing reforms, although they tend to be FDI focused.
Cabinet has today increased the FDI cap in insurance from 26% earlier to 49%. So the foreign insurers can now hold up to 49% in an Indian insurance company. In other changes, now the public sector general insurers and general insurance companies can raise funds from the market, and a minimum capital requirement for health insurance stands at 50 crore rupees. Cabinet has also cleared the controversial 49% foreign investments in pension funds. In a slew of reforms, the Cabinet has given PFRDA a statutory status. Now remember, final call on both these bills rests with the Parliament, as the Parliamentary Standing Committee has already opposed a 49% FDI in both these sectors. To understand all that, let's get to our experts from the industry.
This is a step in the right direction for multiple reasons. One, obviously, it's a strong signal from the regulator and the government that they want to see the insurance industry in India prospering. And I think last week for the life insurance sector, some steps were taken by the regulator to improve the functioning of the life insurance industry. Hopefully the same will happen in the general insurance industry as well.
Passage of the bills in the Parliament is extremely crucial, and with the opposition already making the noises, Mrinalini Krishna tells us how the government is planning to get the opposition on board.
Well, Nisha, insurance and pension are both very capital-intensive businesses and also require long gestation of capital, which is why the government has gone ahead and increased the FDI cap to 49% to allow more capital and to build these businesses further. This is essentially being done to channelize household savings into instruments other than gold, which is an unproductive asset, and that is really the rationale that the government is going to be going ahead and trying to explain to the opposition as well. The opposition, however, is sticking to its stance that it is unfair to expose sectors that deal with public money to FDI. However, the government is very determined and throwing its weight behind this move and is going all out seeking the support of the opposition as well as the left.
In other reforms, the Cabinet has cleared the Companies Bill 2011, which makes it mandatory for the private companies to shell out 2% of their profits for CSR or corporate social responsibility. Other changes are the companies will have to declare the end use of funds raised via private placements, and auditors have to be rotated every 5 years, independent directors have to be changed every 5 years, and they cannot be kins of the promoters. The Companies Bill will be tabled in Parliament's winter session, but considering this bill's turbulent past, what could be its fate this time around? Will it be passed? Deepika Das tells us what's next.
It's taken more than 8 years for the Cabinet to finally approve the Companies Bill after several rounds of consultations with stakeholders. Now what happens, it goes to the Parliament. In the winter session, it will be tabled in the Parliament and it has to be voted into a legislation. But for that, it will need a 2/3 majority from each house of the Parliament. But remember, the last time it was tabled in the Parliament during the winter session in 2011, Yashwant Sinha had raised a huge hue and cry and had withdrawn and had forced the government to withdraw the bill from the Parliament, forcing fresh rounds of stakeholder consultations. So therefore, the government this time around has its fingers crossed that this time around, when it's tabled, the bill will finally become an act.
The Cabinet today also cleared the amendments to the Competition Act 2002. The Competition Commission will now have the powers to change the threshold limit for screening M&As as per the requirement. Now, the Commission's chairman also gets the power to authorize search and seizure operations in line with IT raids without a magistrate's authorization. The Act aims at giving the Commission more powers in terms of conducting probes and screenings in M&As. Impact of the reform drive by the government. What a terrific Thursday it was for the markets, which ended on a 17-month high. The Sensex closed above 19,000, gaining 888 points today, whereas The Nifty tested 5,800 mark, up by almost 1%. Banks, capital goods, consumer durables were the sectors that rallied in trade today. Amongst the individual stocks, BHEL, ICICI Bank, DRL, SBI were the major gainers, while on the losing side it was Cipla, M&M, Bajaj Auto, Hero Moto that ended in red today. Let's hear out what market experts have to say about the trading day and the road ahead for the Dalal Street.
I definitely believe that we are set for a big bull run. As far as earnings are concerned, I think definitely the banking, especially the PSU banking, is going to be one space where there will be opportunities. Again, on the side of the auto numbers, I think there would be opportunities.
I would think that there is value all across. I mean, there could be value even in some FMCG stocks. There could be value in pharma as well. As across, I think, banking.
6,000 could probably take slightly longer than what we would otherwise love to see or we would have started expecting. The way the mid-cap IT players have come back, or rather come into the reckoning, especially, KPIT Cummins, Exaware, Polaris, Persistent, they started becoming so strong, even a Mahindra Satyam.
Not just equities, euphoria was seen in currency market too. The rupee rallied for a fifth consecutive session and hit a fresh 5.5-month high. The Indian currency hit an intraday high of 51 rupees 67 paise to a dollar, breaching 52 to the dollar for the first time after April 2012, and finally closed the day at 51 rupees 74 paise to a dollar. Dollar sales from exporters and banks and robust liquidity flows also supported the appreciation in the rupee. Remember, the gains in the currency also narrows the current account deficit. The flurry of reform measures continue from the Finance Ministry as it loosens regulations to bring in more foreign capital and further improve the investment climate in Asia's second largest economy. Sources in the ministry indicate that the overall ECB limit may be raised by $5 to $7 billion. The unlisted infrastructure companies can raise ECBs through the automatic route, though with certain riders attached. This will save unlisted infra companies from the lengthy process of seeking RBI's approvals. The Finance Ministry has already allowed infra companies and the aviation sector to raise ECBs to retire rupee loans, but is now considering allowing sectors like health and education to also borrow foreign money to pay off debt back home. Suchetna Ray tells us how this will help fiscal consolidation.
Fiscal consolidation seems to be the buzzword and not blocked. So by increasing the overall limit of ECBs, allowing unlisted companies to go the ECB way through the automatic route, the government will not only be able to a large extent manage their gaping current account deficit, but if the foreign exchange inflow into the country is substantial, it will also have a sobering effect on the rupee. And of course, it also serves the purpose that Chidambaram set out his term as finance minister with, that is to push the infrastructure sector. Unlisted companies, other sectors like health and education will be able to retire their rupee loans, and to raise ECB will also perhaps be an incentive for unlisted infrastructure companies to finally kickstart certain projects which have been lying in the lurch for some time now.
It's time for a quick breather on the show, but up next, the stalemate between Kingfisher Airlines management and employees continues. Sources tell ET now the lockout is likely to be lifted only within the next 4 to 5 days. And economic issues took the forefront in the first presidential debate between US President Barack Obama and challenger Mitt Romney. All that and more. Welcome back. You're watching Top 10 at 10, and Vijay Mallya's trouble continues as there were no operations at the Kingfisher Airlines. Talks between the management and the striking employees failed yet again as no settlement was reached with the striking engineers and pilots. To add to Mallya's woes, the lockout is likely to continue for another 4 to 5 days as there is no clarity on the payment of salaries from the Kingfisher management. The company's stock was down almost 5% on the back of all this. Going overseas then, the European Central Bank has kept interest rates on hold as President Mario Draghi waits for Spain to decide if it needs its help. Now, policymakers left the benchmark rate at a historic low of 0.75% as persistently high inflation offset concerns of the area are falling back into recession. Deposit rate remains unchanged at 0%, while the marginal lending rate is still at 1.5%. ECB President Mario Draghi reiterated that Eurozone is irreversible, but also commented on slowing growth prospects of the Eurozone economy.
We expect the euro area economy to remain weak in the near term and to recover only very gradually thereafter. The growth momentum is supported by our standard and non-standard monetary policy measures, but is expected to remain dampened by the necessary process of balance sheet adjustment in the financial and non-financial sectors, the existence of high unemployment, and an uneven global recovery.
European markets were fractionally lower in a choppy session after the ECB held key interest rates. Also, the Spanish Treasury sold approximately 4 billion euros in bonds at the top end of its target. Confidence is thought to be high as the country may soon seek European aid to cut its debt costs. To Wall Street, then US markets advanced after some encouraging comments by the European Central Bank president overrode a batch of tepid economic reports. Now, weekly jobless claims rose by 4,000, while planned layoffs in September jumped 4.9% after hitting a 20-month low in the month of August. However, reactions to the data were muted as investors looked ahead to the government's monthly jobs report due this Friday. To Brent, crude oil rose as escalating tension between Syria and Turkey raised more concerns over the security of oil supplies from the Middle East. Economic worries too remain at the forefront of all asset markets this week as a series of surveys across the world pointed to increasing weakness, casting doubts over the still fragile recovery of the global economy and oil demand. And to commodities, gold shot to its highest since last November, with sights set firmly on the psychologically key level of $1,800 level as the European Central Bank elected to keep the interest rates at extremely low levels. Now, broadly stronger euro too supported the precious metal as holdings of gold-backed exchange trade funds are near record highs. Economic issues took the forefront in the first presidential debate between US President Barack Obama and Republican challenger Mitt Romney. Romney was on the offensive throughout the 90-minute encounter with the incumbent Democrat as he sought to put his campaign back on a sound footing. A CNN ORC Snap poll said that 67% of registered voters surveyed thought Romney won the debate at the University of Denver and compared with 25% for Obama.
It was the first presidential debate between President Obama and challenger Mitt Romney. It was time for a fervent face-off at the University of Denver.
Now, I'm concerned that the path that we're on has just been unsuccessful. The president has a view very similar to the view he had when he ran 4 years ago.
I think math, common sense, and our history shows us that's not a recipe for job growth. Look, we've tried this. We've tried both approaches.
Economic growth this year slower than last year, and last year slower than the year before. Going forward with the status quo is not going to cut it for the American people who are struggling today.
The challenge has only begun. But nevertheless, in the first debate among the three, Republican presidential candidate managed to put Obama on the mat.
And staying with election fever, his poll plank has revolved around development, and through his redesigned campaign termed the Vivekananda Yuva Vikas Yatra, Gujarat Chief Minister Narendra Modi has taken the fight straight to the Congress camp, mostly raising national issues. Speaking exclusively to our network, Modi stuck to the 1,880 crore charge on Sonia Gandhi and believes Gujarat will be his for this time around.
His poll plank has revolved around development, and through his redesigned campaign, termed the Vivekananda Yuva Vikas Yatra, Gujarat Chief Minister Narendra Modi has taken the fight straight to the Congress camp, mostly raising national issues.
ક્યારે કોઈ તમારા ઘરની બહાર છાણું પડ્યા હોય તો ચોરી જાય? આ કોંગ્રેસના લોકો કોયલા ચોરી ગયા, કોયલા.
He has raised the political heat in the country, taking on Sonia Gandhi directly.
Between the last election and the coming election, what has really changed?
But after 5 years, now I have a track record. They have tested me.
And each time, Modi's answers to Times Now made headlines.
मैं आज टाइम्स नाउ के कैमरा के सामने कहना चाहता हूँ, उन्होंने कहना था सबके किसे मोदी ने भी ये कहा भी अखबार में आपके ट्रैवलिंग का खर्चा 1,880 करोड़ आया है.
The countdown to the Gujarat elections has begun. The political fight is on.
To cricket then, India may have been out of the World T20 series, but the action is definitely on. In the first semi-final that is being played today between host Sri Lanka and Pakistan, the Lankans have put up a modest target of 140 for the Pakistanis that recently beat Australia and South Africa in the Super 8s. And I am just told that Pakistan has lost this match and the host team Sri Lanka has won this particular semi-final. All right, on that note, let's take a short break on Top 10 at 10, but all the market action coming up next.
Fresh breakout for the market, closing above 57.50, back touching 5800 as well in the session.
Yes, led by banks as well as real estate. We'll be back with more details on trade.
Good to have you back. What a day on the markets today. Nifty tested 5,800 for the first time in 18 months and the Sensex was at the highest level since July 2011. Aisha Faridi and Tanveer Gill join us with the wrap of the trading action.
A good trading session made a dash at 5,800. You could complain that we didn't quite close above that level, but 5,790 is something that market participants can deal with.
Oh yes, look at the brighter side, and it was a strong 1% rally for the markets, and indicative on the futures and options side that the uptrend is intact with the 5,900 calls getting active and also the 5,800 calls picking it up in the session. If you take a look at individual performance, it was really led by banks and real estate stocks. DLF moved up about 6%. BHEL contributed a significant bit, up about 7%. ICICI Bank, Axis Bank, State Bank of India, HDFC Bank were among the top gainers. You also had support coming in from the auto pack. On the losing side, some of the pharma names stepped down a bit. So Lupin was a bit soft in the session. You also saw Cipla correct.
Good going for the broader market participants, barring of course mid-cap IT and IFCI and Kingfisher Airlines. Rest of the market actually held out pretty okay. So DB Realty, India Bulls Real Estate, HDI, Pasivnad, Bombay Dyeing, anything to do with real estate was actually holding out. Edelweiss, Lanco Infrastructure, Bombay, or rather Adani Enterprises as well for some names which actually held out today.
It's time for the top pick of the day. It started in 2004 as a website catering to the Stanford student community, and today Facebook has come a long way. The social networking website crossed the 1 billion user mark, and guess who was the first to post it? None other than the founder, Mark Zuckerberg himself. Leave you with that. Thanks so much for tuning in.